Hello, and welcome back to another tutorial in regards to the MW Futures Liquidity Scalping strategy. I'm Jelle, also known as MW, and today we will be going over the trade filters. So in the previous videos you have already learned how to set up your start date, the rules for your funded accounts, how you can do a lot of other things as well. One thing that has been added in the meantime with the risk management of fair value gap is that you now are also able to generate a fair value gap every 30 minutes instead of every hour. And then also a potential thing that you can do, which has been added, is to only use first presentation. So I first want to cover those things and then we will get into the trade filters, which are basically the entry settings for your model and for your risk management on your model as well. So the one thing that has been added to fair value gaps is generate every 30 minutes. So what the tooltip says, instead of once per hour, generate every 30 minutes. Meaning that right now, if you look at these fair value gaps, if we would check mark this, you will see that multiple fair value gaps will be added, which will make changes into your model. Also, what we now can do is only use first presentation, which you might have heard of in the ICT 2024 mentorship. The tooltip does say though that it overrides all fair value gap settings and will only use the first presentation, meaning the first fair value gap after 30 minutes past 12, which is the London first presentation, and the first fair value gap presented after 9:32, which is the New York first presentation. If we would mark this, if we would check this, you will see that we will use a different kind of fair value gap. If we then, for example, in this case, would put down the minimum handles, we will cover this later, you will see that this gives other entry models as well, which is a very strong one. This is basically the fair value gap in which I normally trade only, because it's such a strong thing to use, and I decided to add it. I first didn't want to add these things with the same with something that I added today, which was the NDOC and the NWOC bias. But if you have read my X post, I have given it a night of sleep, and due to the fact that I want you guys to be able to create every ICT model there is basically, which this script basically does. It gives you the opportunity to experiment with different ICT models, with different time models, with different entry models, with different bias models. I thought that you guys should be able to get the opportunity to experiment with that as well. So with those two extra features now out of the way and also explained on what they do, we will get into the trade filter settings, which we will discuss today. And there are several options, and basically what this does is filter out certain trades that you should or shouldn't take. So let's first start with the first one, which is use midnight filter. And the tooltip says only short above or long below price. This actually means that if you have the midnight opening price, which is this blue line, so let's zoom in a little bit. If you use this check mark, then nothing will change. But when you do check it, this makes sure that we only short when we are above the midnight opening price, and we only long if we are below the midnight opening price. Meaning, in according to ICT concepts, this translates to we will only long in deep discounts, meaning that we have the highest potential profit run, and we will only short in deep premium, meaning we will only short in high premiums, also equivalating to a higher potential profit run. So that is basically how you want to trade, right? With using a midnight filter, and make sure that you get your bang for your buck and that you don't short when price potentially is already in deep discounts and will reverse on you. So that's what the midnight filter does for you. Next we have the enable opening range. Let's see what the tooltip says. So potentially you already know what the opening range is, but the opening range of New York is between 9:30 and 10 a.m. And the high and low of the opening range have a pretty huge impact on liquidity and what they will do according to that liquidity. So if we disable it for a second, you will see that some liquidity will change. So let's mark 9:30 and let's mark 10. Right now, when it is disabled, you see that there are no liquidity lines at all between this time segment, but when we enable it, you will see that an extra liquidity line of buy side and sell side will be generated. Sell side is over here, but it gets taken out immediately. So this basically gives you an extra confluence on your liquidity bias, some extra liquidity areas that are used very often by the algorithm, which gives you plenty of several opportunities to, well, yeah, use that liquidity to your advantage. So if you would fiddle around with the time settings, for example, and enable this, you could make a model which would only silver bullet scalp, for example, the opening range. Hopefully that makes sense. If you have any questions, feel free to contact me in the Discord, obviously. I'd rather have you asking a question than that you get frustrated with not understanding a concept of creating an ICT model. The next option is enable macro. If you are an ICT trader, you potentially already know what a macro is, but for the explanation, the tooltip says only trade on and between XX50 and XX10, meaning that when this is enabled, you will only place trades 10 minutes before the hour and 10 minutes after the hour. So if we would place that into this trade that we have been using as an example all the time, a limit order was placed here at 10:38. But once we enable the macro, you will see that the order placement will change. So it will actually change to 10:51. This is a very strong concept because according to macros and the studying of them, you will see that during these time segments of 20 minutes, price will most of the times run towards a liquidity objective or side. And now we have the next topic, which is enable NDOC. And what does this mean? Just a little bit is the same as the midnight opening price. Once we enable this button, you will see that new day opening gaps will be charted on your chart. And as an example, this is a new day opening gap. So we have the settlement price at 5, then we have the opening at 6. The difference between that is the new day opening gap. And if we are below the new day opening gap, we want to long, since we are in discount relative to that day. And if we are above the new day opening gap, we want to short, meaning we are in premium according to that day. And the same is basically for the new week opening gap. But instead of using the settlement price, we will use the time of the last trading day of the week and the Sunday open. So let's see if we can go to an NWalk somewhere here. Yeah, so here we have an NWalk, a new week opening gap. So we use the settlement at Friday and then they open at Sunday for this. And this is basically the same as the midnight opening price and the NDOC, right? So we want to short in deep premium and we want to long in deep discounts. I recently added this just today. In before I didn't want to add this like I explained earlier, but due to the fact that I want you guys to be able to create several models yourself that fit your needs according to time and price, I thought I should add this because I wanted to give you the opportunity for this. Alright, then we go to the next checkmark button, which is the enable EMA filter daily. This setting comes out of the ICT Forex Sniper series, and it basically makes use of a 9 EMA and an 18 EMA on the daily chart, which means that if this option is bullish, we should only look for bullish momentum, only look for long trades, and not for shorts. If this filter is bearish, we will only look for shorts and not for longs. Hopefully that makes sense. The same is actually for the EMA weekly. Instead of using a 9 EMA and 18 EMA of the daily, we make use of a 9 EMA and an 18 EMA of the weekly to get a bigger picture. And yeah, but that's basically it. So this, most of the times, if these are aligned, you will see that price most of the times moves actually in that direction in the long term, and potentially also gives you the opportunity to hold your trades for a longer period throughout the day. Now, then we have the custom filter setting. So this is also a 9 and an 18 EMA for bias, but with this custom setting, you can set this EMA filter to your own liking. So when you have this checked, and the default is set to 1 minute, but what you can do is actually click here on the drop down menu and set it to any time frame that you want. So you can experiment with this, which works for your model. Do understand though that if you are trading on the 1 minute, you can only use a time frame that is 1 minute and above. You cannot choose the 30 seconds, 15 seconds, 10 seconds, or whatsoever, because that's just how PineScript works. You cannot sadly get information from lower time frames securities. So hopefully that makes sense. And that's basically how the filters work. So with those settings, you can experiment a lot and have fun with, okay, my model currently has the best confluences with only using the NDoc, for example, or a combination of these different 8 settings. Or perhaps your model works the best with a custom time frame, for example, the monthly maybe. That is a thing. Or perhaps the custom EMA of the sniper series works the best for you on the 1 hour. So hopefully this makes sense. If you've got any questions in regards to those settings, feel free to give me a message. I really rather have you asking a question than that you are getting frustrated. So please ask your questions. All right. Now we will also go over the entry information, and these are basically some extra confluences for your entries, meaning that you are looking for a certain type of thing. With the first option being that you can use the volume imbalances with your fair value gaps. So right now on the basic default settings, this is checked off. But if you would check it on, it would incorporate volume imbalances into your fair value gaps if they don't hit consequent encroachment. Well, if you don't understand what that means, that's totally fine. If you want to get more in depth in regards to volume imbalances, I suggest you watch the ICT 2024 mentorship. But now as a small example, we will use this particular fair value gap. If you zoom in on this fair value gap, you will see that it consists of three candles, right? But there is also, what is interesting about this fair value gap, is that there is a small segment here in price which doesn't have a body. This is called a volume imbalance. If you would check this use volume imbalance, you will see that the fair value gap doesn't get drawn to the wick, but actually gets drawn all the way to the body of that. Do understand though that this will change the way your stop loss and entry is placed. As you see, instead of entering here, we now enter here. So if, for example, you would have your stop loss settings on the candle high or candle low, instead of actually placing it on this, in before, if you would have your stop loss on the fair value gap candle, it would have placed the stop loss here. But if your max stop loss is large enough, it would now place it on this candle over here, because the fair value gap candle is now a combination of these two candles. So hopefully I explained that properly. If you don't understand it, it's totally fine. rewind this part a little bit, or ask me a question again through Discord, or have a look at the 2024 mentorship of ICT. All right, so let's get to the next step of entry information. So we have entry slippage. So by default, this is set on 0. Let's have a look at the tooltip, what it says. So we will place an entry at X amount of handles above/below for value gap entry. Keep it 0 to enter on a for value gap high or low. So on default, you will see that for entries, we will use the value gap high or low. But if we would, for example, put this to 2, you will see that our entry moves up by 2 handles. If your max stop loss amount allows you to have that slippage, it will actually drag it down as well. So with having an entry slippage of 2, it will add 2 handles to your entry, but it will also add 2 handles to your stop loss. Hopefully that makes sense. The next item that we have is the close above or below. So if we look at the two tips, how many handles should we be closed above or below the fair value gap before valid entry? By default, this is set on 1, but let's place it for 0 for the intention of learning. So once it is 0, it means that a candle could close on the fair value gap high, and this would mean that you take an entry. Most of the times that's not ideal because we want to see fair value gaps being ran through and then rebalanced to it for an entry, right? So to make sure that a fair value gap is respected in regards to our entry, we wanted, for example, to close 2 handles above the high, and if we, for example, would set this to 4 handles, that would mean that price would have to close 4 handles above the high before we do an entry. So if we have a look at this candle right now, it closes 7 handles above. So if we would set our close above below to, let's say 8, so let's say 8, and wait for this to change. Is it not 8? Perhaps it's a little more. It's possible. Okay, so if right now with this setting we want the candle to close 10 handles above before we place an entry. So instead of entering on this candle with a limit order, we now enter on this candle. Hopefully that makes sense, and this is just a small addition which filters out, again, liquidity runs and respects when a fair value gap would gets respected in the other way, for example. The next setting is bodies must close 75% above or below. What does this mean? So a candle must close 75% bullish or bearish. This prevents liquidity runs with wick entries. So this candle over here, it has a extremely nice bullish momentum. And if you would drag your Fibonacci on it, you will see that the close of the candle is above the 75% marker. If we, for example, would have closed below, let's say, here, that means that this candle is not entirely bullish. So this is also a way that to determine a more bullish or more bearish momentum move, giving us a better opportunity of risk management. So hopefully that makes sense as well. So if you check that mark, in this instance, if we would check it, nothing would change because it is actually already a 75% candle. So there you go. So now let's go into profit targets. So we have a minimum handle run. This means actually, if we look at the tooltip, minimal handles 40p. Will override liquidity pools if less than X handles, leave 0 if not applicable. So what this basically does is it says, alright, if the first take profit does not give us 10 handles or more, we don't trade. So let's say this move right here to the first profit target is 40 handles, right? If we say, alright, our minimum move has to be 50 handles, you will see that we will not take this entry. But if we put it back to 39, I think it was 39, you will see that we will take the entry. So this is basically also a small profit target filter criteria, like are there enough handles available for you to actually take this trade. And in ICT's lectures, you hear ICT most of the times saying, all right, a minimal handle run that you want to have for your first profit target is 10 handles or 20 handles, because with 20 handles you can at least get a partial in between. But since our first partial is already at 10 handles, this is enough. What we also have is a max handles for first TP. So by default this is set on 50 or 40. But let's read the tooltip. So max handles for first TP will override liquidity pool if it's greater than X handles. Leave 0 if it is not applicable. So right now, if we leave it at 0, nothing will change. Why? Due to the fact that this liquidity pool is above the minimal handles. And yeah, but if we, for example, would change this 40 handle move to a max handles TP of 20, you will see that our first take profit target will be reduced. There you go. So with this, you can again customize your model little bit by little bit to ensure that your minimum handle runs, your max handle runs, your partials, your money is taken off the table. So it's very nice to customize models according to your own preferences in this way for sound money management and for your mental as well. So hopefully that makes sense. And then we have the last topic, which is miscellaneous. And we have line length. Line length basically means, all right, for our entries, our stop losses, our take profits, how long do we want to see these lines? So right now it's set at 5, which means that it continues 5 bars, 5 candles. If we set it to 10, you will see that these bars will get dragged out a little bit longer. So nothing interesting, basically. Then we have the enable alerts option, which is actually a very important one if you want to be alerted by what the script does. So if you enable this, which it is by default, you will see that the tooltip says the following. We'll send an alert when a limit order is placed, break-even price is adjusted, or that we have to close all our trades. So when we place a limit order, you will be alerted. Once your stop loss has to be moved up, you will be alerted. And once we close all our trades, you will be alerted as well. Do note though that for this to work, you would have to go to your alarms, add create an alert, and under conditions, you will have to select MW Futures Liquidity Scalping Strategy, and then order fails and alert function calls. Then you hit create, and this will ensure that you have an alert and that you will be alerted for these things to happen. You can keep it off, that's no issue at all, but just know that you can have that extra reminder for when you should place a limit order, when you should move your stop loss, and when you should close all your trades. So hopefully everything that I explained in today's tutorial makes sense, and you should be able to create basically all models that have been taught through ICT. It gives you a lot of opportunity, it gives you a lot of flexibility, and it should give you the power in your own hands to create your own model from this moment on. So thank you for watching. I hope you liked it, and I'll talk to you guys next time.